Okay, we're going to start now. Today is June 19th. We're doing a free webinar for HarmonicTrader.com. We're going to discuss some finer points of harmonic trading, some things that I really want to express to the group and to people that will be listening to this recorded webinar in the future of some of the more important concepts to stress that are outside of normal pattern recognition strategies. This recording will be made available. Anyone that was able to sign up through Facebook or some of the other social media groups, you guys will have access to this. And it's going to be a really solid session. This kind of an introductory presentation that I want to, the message I want to broadcast is really the importance of other strategies than simple pattern recognition strategies. I think there's been a lot of new material and new people talking about harmonic trading, which has really stimulated the interest in the overall trading community. But I think there's really some important concepts that anyone and everyone must consider to understand how to utilize these patterns to profit consistently. And I want to start by looking at a trade that we sent out about 2 weeks ago that was sent out on Harmonic Trader website. Now, I send out a couple of trade recommendations every week, all Forex, and then we have stock recommendations, which are longer term, that are posted on the site. But the Forex trades really reflect that direct application and a real-time application for people that are day traders or short-term traders for currencies, where we try to take advantage of the clearest structural possibilities and then execute those possibilities with other factors, relative strength, maybe smaller time frames that are clarifying what the larger time frame is. But in my opinion, the 15-minute and the 60-minute patterns are usually the best. And in this case, we sent out a bullish shark on the daily. Now, we triggered off of the 60-minute and analyzed the execution based on the 60-minute. But the bullish shark, that's a relatively new pattern that I released last year. That 1 minute, please. That is an excellent opportunity. It's kind of the predecessor to the 5-0 pattern, and it looks like this. It's typically an impulsive structure that is an extreme corrective, counter-corrective move that seeks to capitalize off of the first test of a 886. So in this case, this shark pattern possessed all the elements that set up and validate the structure. We have this long extended move, which is the typical formation and initial starting point for a 5-0 pattern. But in the shark, we look for this extreme counter trend move to correspond with some type of 886, clear 886 retracement of a prior support point. In this case, the 886 with that, this 2.0 extension served as a great area to be looking for, at a minimum, a short-term counter trend reaction. So in this type of structure, it can be tricky because the sterling dropped quite a bit. It dropped almost 1,000 pips, just about 1,000 pips off of the previous month's high. There was no correction within that downtrend move. So looking at this structure might be difficult to perceive an opportunity, especially when we're down here, down at the 153 area, 154 area, and let's just look at it bar by bar. Clearly, and based on what the requirements for what the shark are, that points us in the right area. But the structure alone, and this is a critical point, the price pattern structure alone does not constitute a trade. We need to see some other type of formations of either some type of consolidative or bullish constructive consideration on a shorter time frame. That would be our 60-minute. And also look immediately following the completion of the pattern to determine whether or not the clear downtrend will even start to stabilize. Now, that's what happened in this case. We had our 886 retracement that was tested. That was at 153.50. That was the most important measurement in the whole setup. Now let's take it bar by bar. We see as this is selling off throughout the entire month of May, we come down, we finally test our numbers here where the pointer's got the price bar highlighted. Now I call this price bar, and in my books and webinars discuss the importance of, this is called the terminal price bar. This is the price bar that tests all the numbers at the completion point of a pattern. And it's critical because we use this price bar to make assessments going forward after the pattern has completed to determine whether or not, even in the short term, we will have a valid structure to give us a valid reversal at hand. So examining that completion point, that guides us in this 153.50 area for the possible long position of the trade. Now again, this can be a tricky situation, especially due to the nature of the decline, that the previous month was pretty much straight down without any corrective move. But this right in here, looking at this 886 and looking at that potential reversal zone, is the exact area where we can at least focus our executions and have a high probability of knowledge of whether or not this is going to work out. Now, when I talk about the terminal price bar in the webinar sessions, I talk about the execution of a trade, and we do not even consider the execution of the trade until after the pattern is completed. And that's really important because a lot of times that will prevent you from jumping into the trade. I think one of the most common mistakes people are making is that they are putting limit orders at the top end of the potential reversal zone or somewhere in the middle of the potential reversal zone, and still not being flexible, not making those assessments of what is unfolding at the completion point of the pattern, because we still need to take a look at this exact area to determine whether or not this will give us a minor bounce and then go lower, or if it in fact will give us a larger opportunity and a larger profit segment. Now there's some more finer points to the shark pattern that I recommend that you examine in the webinar that is actually posted on the Facebook page. If you guys want to go back and look at that, I strongly recommend it because the shark pattern and the 5-0 pattern give you really solid measurement tools and an understanding of price structures outside of the classic M and W type formations. So looking at this shark, we don't even consider to take action until the pattern's completed. Now looking at this clearly, this pattern we might have recognized in this structure when it was sent out 2 days before the realization of the pattern, but looking at this, we don't have a valid execution, and we don't even consider a valid execution until we've actually completed and tested all the numbers in the zone. So it's not until the next day that we're actually looking to take action. It's not on the day that we're looking to take action, it's the next day. So in the webinars and the execution, I talk about the terminal price bar +1, meaning look for that price bar, and this can be on any time frame. This can be on a 60-minute, a 15-minute, 5-minute. It doesn't matter. It really, the focus of examining and waiting for that terminal price bar is critical. For example, let's say we were looking at a 5-minute chart, and this was a bullish shark on a 5-minute chart. And let's say it was 11:14 right now. So let's say it was 11:14 and the pattern completed. We would want to wait until the 11:15 mark, that is the start of the next price bar, before executing. Because what happens is that in invalid situations, if it's not going to work out, you're quickly going to see a continuation of this predominant trend. In this case, we're looking at the 60-minute. Now, let me pull up a couple of charts here, and first take a look at the 60-minute here. Because once the daily time frame has satisfied the pattern and tested numbers, we then break it down to the quicker time frame and look at that intraday time frame for confirmation. Are there other signals? Are there other possibilities that might be suggesting that what the larger pattern is telling us? We're looking for some kind of bullish confirmation. So looking at that on that day, which was June 3rd here on this price bar, June 1st, we're then looking, and that was on Friday, we'd then be looking at either the Sunday night session or the Monday session for some type of stabilization. Also looking for something on the 60-minute to confirm what that's telling us. Now, here is where my pointer is June 3rd. Now, we have some interesting structures here. Namely, we have a really clear bullish divergence in relative strength. And I talk quite a bit about relative strength in the webinars and in the Harmonic Trading Volume 2. There's a lot of work done, and I strongly emphasize that if you're not looking at relative strength, begin looking at relative strength and linking up relative strength with the completion of patterns, because relative strength is typically an early signal, but it's going to give you that early confirmation of what the larger structure is telling us. In this situation, we had a really clear 60-minute setup, that divergence, and when that divergence was confirmed, notice how the RSI popped out of the zone right in this area on June 3rd to give us that early indication that there is some kind of stabilizing price action here, and on a 60-minute time frame, that's pretty substantial. The larger pattern was pointing us somewhere in that 153.50 area, but notice on the daily chart that went down as low as 152.60, despite the fact that there was some overspill or a trading price behavior that exceeded the PRZ slightly. This is where it's critical to wait for that price bar, that terminal price bar, to complete before considering or even looking to execute the pattern. So again, be patient with these setups, be prepared, but be patient and look to execute immediately on the next price bar or the next 2 or 3 price bars, but after the pattern is completed. This is a great example because the price action declined pretty steadily, hit all of our numbers. It's really what happens after the numbers which is the defining point for the trade. Now, looking at this price action, we see at least a minimal stabilization immediately following this test of the 153.50 area. But more importantly, that RSI gives us that early indication that we have something to look at, we have some consideration, we have a constructive relative strength situation where there's a bullish divergence, that clearly that relative strength is beginning to turn, and that gives us our kind of the confirmation of looking at that entry point at 153.50 as something valid, because before the price action begins to reverse in earnest, we see that relative strength ticks up out of this extreme zone after that bullish divergence has completed and gives us a pretty strong reading for the next 2 or 3 sessions. So after that's happened, those early indications of a strengthening RSI will be indicative in the PRZ of a profitable move. So getting back to, let's quickly review our daily PRZ. So all of that 60-minute action is happening right in here in these 2-3 price bars at the completion point of the zone. Now, one of the interesting aspects of this is even breaking this down on the daily basis. Looking at this daily RSI, we have a confirmation as well on the relative strength. Now, this is a slightly different structure. This is called a complex structure. But this complex structure alone tells us that we have something going on, that despite the extreme sharp downtrend of the entire month of May, we have a pretty clear setup where we want to respect what this RSI is telling us. This RSI clearly started to bottom towards the end of May, and then by the 5th of June, actually on the daily basis, completed the complex structure and added further credence, further evidence that this daily shark had some weight behind it. And this is really critical because this links up how we read RSI and how we must respect RSI with clear pattern structures. One, yes, you got to get the patterns right. And another point of contention that I have is in some of the interpretations and some of the things that are going on right now is that people simply aren't getting the measurements right. They're not getting their ratios right on Gartleys or bats or pretty much calling anything a Gartley. And that's really created some confusion because if we're not putting the right measurements on the structures, we're not going to get in the right ballpark. And that's the primary function of the patterns. The patterns get us in the right ballpark. Then with the help and confirmation of RSI, that gives us some precision. That tells us what's really going on in terms of the market movements. This was a difficult setup to actually even believe in, to want to execute, due to the severity of the month of May, of this thing falling nearly 1,000 pips without any corrective move. But the combination of utilizing the daily pattern, and that daily pattern tells us to key off of that 886, somewhere in that 153.50 area, and the stabilization and reversal of RSI. Again, notice how it's pretty early in the move, but once that's triggered, that gives us a full weight of the possibility of the shark pattern. Now, the shark pattern sets this up and sets up the execution of the long really on the intraday level. Here on the intraday, let me go back to that intraday level really quick. I think I deleted that chart out. 1 minute. Here we go. So it's really at the pretty early on, following the completion of that pattern, that we understand that we have some minimum targets beyond that. If we can identify in the early stages of this reversal within the course of 2 or 3 days, we're going to have a high degree of probability and a better understanding that, one, the predominant trend of the past month is going to experience some type of counter trend rally. Nothing goes straight up or straight down. And two, the measurements, the RSI measurements and the pattern structure itself is clearly identifying the levels to consider for some type of counter trend move, to look for some type of corrective bounce. Whether or not the sterling drops even further later in the summer or longer term, we're just focused on respecting those exact measurements at that time. For the daily pattern, that was that 886 with some definitive and undeniable relative strength measurements that we're reversing. And then when we break it down on the 60-minute, we clearly see a complex divergence of confirmation on the 60-minute. Now, again, looking at this 60-minute basis here on June 3rd is where the ultimate bottom was finally triggered. But again, the RSI did not give us a buy opportunity, did not confirm the buy opportunity until the next day or a little bit later. Now we're still able to buy within that zone. And let me get back to take a quick look at that 60-minute zone. Again, it's really important to cross-reference these time zones, these time frames, and cross-reference what's happening with RSI, because we do need to differentiate RSI. Those are the two differences are complex structures versus impulsive structures. But the most important advantage is that the structures give us that ballpark area. At least we have some idea of the possibility for a reversal, a profitable reversal. And then when it's confirmed by RSI, we have a greater understanding that, one, the downtrend bias is experiencing some type of counter trend move, and we want to respect what the market movements are telling us. So if we go back on the 60-minute, let's go back to the beginning of the month. Here we go again of looking at that entire the completion of the reversal. And right here is where the larger PRZ, and this would be, let's do it in a green line, just that solid green line is the completion of the daily structure. So if we're looking for some type of execution, let me bring it up a little bit, it's right up in here. We have 2 points to really note. First of all, if we're looking to execute, and this is just a basic principle of analyzing harmonic price patterns and looking to execute off the completion of a pattern, if we're waiting for that pattern to complete and we're looking for the next price bar, in this case we're waiting till the next day to look to execute the pattern, then somewhere within this zone here, somewhere around the first, is actually the point where the entire structure was tested. And then it's not until this point where we even consider the execution of the trade, of the long position. Now if we're breaking that down, we're looking at the 60-minute for that more precise kind of refinement of the daily zone, which is really critical, because this is how this is an important aspect of harmonic trading and an important aspect of being as precise as possible in the execution, is that we're not going to get that ideal price pattern reversal every time. Again, the patterns are going to put us in the right ballpark. Then our job is to look at those quicker, shorter-term measurements and readings, especially on RSI for me and for harmonic trading, that give us the optimal entry for that execution. Now in this case, if we're looking at the 60-minute and breaking it down on the 60-minute, we see that we're still completing the secondary test in this area, and we're still in the oversold area. It's something I talk about in trade execution and the 2 or 3 webinars of the advanced studies, is the use of looking for that second reversal. Once we have an initial test here and then we have a secondary test of RSI, whether it's a quick test or it requires a little more time, we're not looking to execute until the RSI gives us some type of sign of reversal. So we don't even have confirmation on this until June 1st. And this, again, all an attempt to optimize our execution and not jump in front of a falling knife, if you will. And that's exactly what happened last month with the large move in all those currencies. That was a pretty sharp downfall. And I saw a lot of people who were looking, say, at the euro who are looking at the pound and assuming that there were pattern structures, that there was Gartley patterns and ABCDs off the top, but none of those structures gave you any kind of confirmation or any type of sequence of events of intraday confirmation, intraday structure with daily confirmations that would suggest and confirm a profitable move. Most of the shorter term patterns that were materializing last month in the currencies, especially against the dollar, yielded very minor pullbacks and counter trend moves, and really a lot of these currency markets right now are being dictated by daily levels, and that's something else I strongly recommend. Is if you guys are trading currencies, that you're fully aware of what the larger retracements or larger patterns on the daily time frames are saying for all pairs, because it just really seems like the daily structures and the daily measurements right now are holding a lot of weight for the overall trend direction. So looking again, really just to review quickly, it's not until this price bar here where we finally get that confirmation move. And this is really important because stressing the value of relative strength and stressing the value of being somewhat subjective and selective with all of your patterns, no matter what, is one, going to save you a lot of money. It's going to prevent a drawdown in your execution, where if you just are looking at a pattern and looking to execute exactly at the 886 and maybe put your limit order at the 886, I'm really urging you to be a little more analytical, a little more proactive in that. Get ready when you see the pattern complete. Absolutely be ready, have your eyeballs on the screen. But it's not until after that pattern actually completes that we break it down and look on the quicker time frame to optimize our execution. In this case, this extra drawdown of nearly 100 pips below that 886, although it was only for a quick 8 or 10-hour time period, would have saved you some money, would have saved you a lot of grief, and in the long run for all harmonic patterns is the way to go to optimize your executions. Now remember, we're always, no matter what, whether we have this type of overspill, as long as we don't trigger our stop loss level, and for the shark is the shark structure, that stop loss from the whole pattern perspective was below 152. But really, I'm more concerned with linking up RSI and executions in the PRZ. We still have a valid structure and a valid execution, despite the fact that this went lower and then consolidated for a while. As long as we're still executing in this shorter zone, in this the key area at or just under the potential reversal zone at 153.50, we have a valid trade. And that's really important because it's in this area, it's in this consolidation zone where the real make or break levels come to play. And let's just move this to the left of the chart and then move slowly. Here, where we have our arrow, that's where our daily shark completed. So then it's after this point, from a price perspective or a pattern perspective, then we're looking for some type of RSI reversal beyond that. Okay, so we finally get that on a 60-minute level the next session, the next day. So then we're expecting some type of counter trend move from this point forward. If we're going to see a continued failure and see this continue lower on the daily, what's likely going to happen is this initial low will be taken out pretty quickly, and this would clearly serve as our stop loss, and from a structural perspective, it would negate any kind of assumptions, patterns assumptions that were validated initially on the daily level. So if we're looking at that looking at the daily, and let me bring that back up. Here's our shark again. Remember, here's our bullish shark completed with our structure pointing to 153.50. So now we're looking at the 60-minute. So now we have our trigger, we have our RSI reversed out of the zone and executing in this 153.50 area. We're still okay. The whole trade and the whole reversal scenario itself, one, at a minimum, is stabilizing, so that sideways action is very constructive. And the other is take a look at our RSI progress. Our RSI progress is not rolling over, is holding its head above the oversold area, and is actually starting to make headway higher. So it's in this area where our most difficult assumptions, most difficult decisions need to be made. But if we understand that the 60-minute is giving us strength, and especially the relative strength is exhibiting a new bullish counter trend, and then realizing that the daily level as well, and let me go back to right here. There's a 60. 1 minute. Okay, go back to the daily here. Lost that daily chart. All right. So here's back on the daily. So we have this as well, respecting what the daily readings are telling us. That complex structure, again, providing evidence at the completion of a defined pattern that we have some type of reversal behavior, counter trend reactive move that is establishing a profitable segment, a highly probable profit segment. Now, recalling from that shark webinar what we can typically expect, since the shark really is a structure that is precedes the 5-0 pattern. Typically, we're looking for some type of move to complete that 5-0. Whether or not that 5-0 yields another reversal, we can use this shark pattern and use that framework to line up our targets, our initial profit objectives, at a minimum to complete this 5-0 pattern. So between this 153, 154 area, where we have a lot of technical evidence, RSI, our shorter term time frame, that's saying at a minimum we have a high probability for a counter trend move back to this 157, 80, 158 level. So it's within that area where we're looking for that 300-400 pip move, having a high probability of that move at hand based on, one, the harmonic pattern present, and two, what the relative strength is telling us. So really important, and to just sum up what the main point I want to get across to everyone today is to, one, be proactive at a pattern completion point. Wait for that pattern to complete. Look for other technical signs that would confirm what the pattern is telling us, but don't be more skeptical, I guess is a better way to put it, where we need to demand and see certain counter trend reversal behavior in the price action alone be exhibited within those 1, 2, or 3 price bars beyond the terminal price bar. And that terminal price bar, again, is the price bar that tests all the numbers at a defined pattern completion point. The other point, again, is get your measurements right. Make sure if you're looking at a Gartley, it's a Gartley. If you're looking at a bat, it's a bat. If it's a 5-0 or shark, know how to differentiate those numbers. And then finally, and this is an area that I think I'm going to expand on quite a bit. I've uploaded probably about 5 or 6 new videos, about 4 more hours of combining RSI with price patterns, because it's the best indicator that tells us what's going on with the internal strength of a trend, and we know how effective price patterns can be. We know that the price patterns are the best tools when measured properly that get us in the right area, that right ballpark, so that we're at least have an idea. We don't get blown out on a situation and have no clue of where to possibly look to enter or exit a trade. So that's why the price structures are so good, is that it gets us close, but we still need to allow for that real world response, and what can happen in the markets is, most patterns are not going to reverse exactly at the numbers. They will likely exceed the numbers slightly, go beyond the PRZ, but it's right after it tests all the numbers that we're then looking for the clues for an early clue of valid reversal at hand. So these are critical, and this leads into my final point of a new class that I'm going to be conducting next month. It'll be a 5-class session where we will go through all of the patterns, all of the structures and RSI techniques that I've generally outlined here, because there's a definite sequence of structures and of procedure, if you will, that I follow for every trade that is critical, and I know will help people that are learning harmonic patterns of how to differentiate which structures are going to give you the sizable move and which structures maybe give that small reactive move and then continue in the predominant trend. And that's the biggest problem of harmonic trading, is knowing which structures are going to give those sizable moves and which aren't. One of the best ways, again, is employing the right RSI measurement strategies and having an understanding of where the patterns are completing relative to the overall or larger trend. Very important. But in the course that we're going to do next month, we'll outline all of these, and it's going to be in a shorter time period. I've done these classes in an 8-session, usually over twice a week, over 4 weeks. I know I've revamped the course that we can do all of the essential price pattern stuff within 2 weeks, and then what I'm shifting and what is new in this class that's coming up is going to be a greater focus on the effectiveness of RSI, how to differentiate the 2 types of RSI, and then really bring it together to have a greater understanding, like this example showed us, of how to interpret the early signs of a reversal at hand. So I want to thank everyone for coming. If anyone has a question, I'd like to leave the last couple minutes. If you would like to type your question into the chat box on the GoToMeeting menu, I'll take any questions now, and anything related to harmonic trading, anything that you might, any question you might have, please feel free to ask now. And I will be sending emails out that'll have information regarding these classes. And then, of course, I have the existing harmonic trading webinar course itself, and then I have actually a new library of 25 hours of material that starts from the very beginning, introduction of harmonic trading, goes through every pattern and in detail, outlining every pattern. And then, as I said, the new material that I've uploaded are these advanced RSI strategies, which has really made the difference in refining and optimizing trade execution and trade management as well. And these are some of the areas that I think a lot of people are having problems with. I think a lot of people can grasp the fundamental measurement techniques of pattern structures, and people are having success with the patterns, which is great. But the problem lies when certain patterns don't work out, or having that greater understanding of knowing which patterns can be relied upon to give a larger move versus which patterns are merely a little counter-trend reactive reversal that really don't yield much. And that's the focus that I want to put out there for people learning harmonic trading is to show them the effectiveness of these advanced strategies that really ties together all of the steps, the three important steps of harmonic trading, which is identification. Now everyone, I think, is able to learn the rules of pattern identification and execute the trades based on the zones, but then it's getting into that advanced execution strategy of interpreting price action at the completion of a pattern, and then trade management, which is really important because it's in those early stages of a pattern completion where the technical science will reveal themselves of whether or not you're going to have a sizable move. So that's all I have for today. Again, I will post this recording on the website a little later today. If you have any questions, feel free to email me at harmonictrader@harmonictrader.com and look for some more information on our classes next month. Thanks, everybody. Have a great day.